Hi guys, Lee Gettess here with the Market Sense for the week of June 9th, 2015. We will stare at some charts that come from the Trade Navigator software. First chart is a weekly bond market chart, and they've kind of surprised me. I knew there was resistance here at 150.16. That's the lower moving average, which they broke down below last week. So, there was the potential for that to be resistance. Really thought they were going to the middle moving average around 152.20, and they still could. But right now, they are holding that 150.16 area. They've been there a couple different days, and they're starting down. This sure looks like they at least want to go down here to the 147 area where the projected low is. It's possible they could hold at the lower Keltner band, but they did that last week, and you kind of don't expect them to do it again as it's moving down. And truthfully, if this has really got some energy behind it here, they could break down below this and boy, where could they go? Zero? I mean, our momentum indicator here is clearly showing negative momentum, well below its moving average. And there's really no end to how low they can go other than to say just don't try to step in front of them. If they do hold, it'll probably be somewhere around 147. And of course, there's still the possibility that they'll turn from absolutely nothing and go back above 150.16. But boy, they sure have held it nicely so far. That's a little scary there. And as I've said many times before, the Fed may be hesitant to raise interest rates. I don't think the bond market is. Stocks, well, they're still relatively quiet. They still haven't done much of anything to get out of this big long sideways pattern they're in here. But they have shown a little weakness so far this week. The support looked like it should be in the 2075 area, and they went a fair distance below that, but have turned and are back above it now. You would think the best resistance is roughly 2097 here at the lower moving average, and they have not been to that yet. Since they've been below the potential support first, they could just charge right back through there and go to the 2110 area here at the middle moving average, or higher. I wouldn't say there's a limit on it. But right now, just getting back to that 2097 is a bit of a problem. I should mention I'm giving prices that are for the June contract, which we'll only be trading a couple more days here. At the end of the week, though, things will switch over to the September contract. You'll find prices about 750 to maybe even 800 points lower than the levels we're discussing here. So just, subtract 800 and you're pretty close to what we're looking at there. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see how we're doing.